Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Tesla report for Friday, November 25th, 2022. Let's take a look at the weekly chart and show that assuming we close today, the week itself, above 170.11 and closing above 178.22 also helps, that this has been a mere bottoming process or a testing of long-term support. You know, when it comes to multi-week or multi-month signals, whether it be to the upside or the downside, they are a process. You've got daily settlements and then weekly settlements beyond a 1% margin. So let's get to that actually right now. If we were to close below 170.11 today for the week itself, it does need to be by a 1% margin below 170.11 for what I call technical clarity in terms of a reliable sell signal that would then likely play out into the first quarter of next year. And while we're at it, that's 168.41 is the 1% violation of 170.11, and Monday's close of 167.87 is just below that. So in terms of a sell signal event today, and I can show that here on the daily chart, on Monday we closed below this area. At the time I'd mentioned we really need at least another day to see this flesh out. In other words, had Tuesday been a huge down day, then it would have been pretty clear that we were entering a longer term sell signal. But because that didn't happen on Tuesday and we settled right back into that zone or right at that level that is now 169.53, then certainly Wednesday's rally has confirmed that this has just been a mere testing of long-term support. So if we fall today and close below 167.87, in other words, Monday's settlement price, a new low settlement price following the November all-time high from a year ago, then yes, we are in a long-term sell signal below this formation as well, below the Fibonacci levels, below the band of channel support, and then anticipating, you know, over the next month or two, and I know this isn't going to happen today, but I'm going to put it out there anyway, anticipating over the next couple of months this descending channel structure here at 118.78 to 130.49, and then perhaps as we get into the second quarter, middle part of next year, we could, under that situation of closing below 170.11 by the 1% margin and at below 167.87, you can see it all here in the support resistance. And by the way, you know, the newsletter is downloadable for free, and you have a link just below your screen if you want to see it. But we could unravel all the way back to the March 2020 COVID low. That's around $28 a share if we were to close below 167.87 today, which once again would be below Monday's settlement price and below all of these important line study, all these channel structure levels. But that's not what's going to happen, I'm quite sure. In fact, upside today, let's take a look at that. We may well reach 192.31 with Wednesday's rally. 192.31 in reach, a mere session containment level. I've dropped it from 2 to 1 stars. Yes, can contain session strength, and we could fall off from here into later next week, back into the 160s, 170s again. But, you know, as I was mentioning yesterday, with this testing of long-term support, now that we actually have tested it, this 211.85 formation should be considered our 1 to 2 week target. And that still is in effect. And if we close today above 192.31, I think we're probably, with this kind of volatility, just about 2 to 3 days away from reaching 211.85. 211.85, this classic descending channel top, able to contain buying through next week, quite possibly the entire month of December or into later December anyway, because from 211.85, we can fall off back into the 160s, 170s again within 1 to 3 weeks of doing so. And it would be a settlement above 211.85 that would tell me that we actually have a meaningful buy signal, probably into the 260s within 2 to 3, 3 to 5 weeks of doing so. But we'll cover all that if we approach 211.85 in the coming days. Once again, downside today, if we break 177.93, I have these minor points. All the minor points are carefully chosen, FYI. They're all very well suited for aggressive day traders. They could be anything from a short-term Fibonacci level to trend lines that aren't shown. But 175.22, 172.94, both minor points, 170.11. This band of support, I'm just going to call it the weekly channel bottom, is our support into next week. And actually, from from here, we can rally nicely, not only for the next week or two, but because this is a one-year channel bottom, as I've been saying, we could bottom out here through Q1 and continue trading higher above $300 a share over the next 3 to 5 months. We'll cover all that, obviously, as that, or if it happens. Once again, closing above 211.85 would be our early indication for aggressive gains as we move into January, February of next year. I wonder if there's anything else to say that's actually relevant. I will, let's see, if it gets ugly today and we sell off in a big bad way, and I don't anticipate seeing it, but if we break the 170.11 area, 169.53 on the daily chart, this is a solid zone of support. I think you've got a gap here, you've got a high of a low. There's just all kinds of stuff going on in the very low 170s. But in any event, if we break 170.11, we could test 160.60 intraday, the simple trend line I have as an intraday support. And then, of course, closing below 167.87, that low settlement price from Monday would tip the market south aggressively longer term through the rest of the year and well into Q1. But that's not where we're at. We have tested long-term support. We've come off of it nicely, and we should reach 211.85 over the next week, two at the most, and quite possibly this 260s in reach by the end of January, perhaps, but we do need that buy signal above 211.85 to make that an aggressive reality. And that is all I've got for Friday's Daily Tesla Report. Please click like each and every time you watch the Daily Tesla Report and subscribe. I'll be back Sunday afternoon with Monday's Tesla Report.